My name is Jay Shamba. I'm the director of the Institute for International Economic Policy, or IIEP, here at George Washington University, and I'd like to welcome you all virtually to Washington, D.C. We here at IIEP are very pleased to be hosting this event on One Currency, Two Markets, China's attempt to internationalize the renminbi, as part of our series on China's economy and U.S.-China economic relations, and to once again be partnering with our co-sponsor, the Seeger Center for Asian Studies at GW and the GW Center for International Business and Education Research, GW Cyber. For those of you who don't know us, IIEP is located at the Elliott School at GW and is a cross-school interdisciplinary research center. We aim to serve as a catalyst for high-quality, multidisciplinary, nonpartisan research on policy issues surrounding economic globalization, and we interpret that mandate fairly broadly. We include work on trade, international development, international finance, climate change, poverty studies, and we've also had quite a focus around China's economy for our entire history. We've been very busy lately at IIEP with a number of events, and we have two more events this fall as part of our series on China, I believe on November 19th, and then one in early December. So please take a look at our website to see upcoming events, or for that matter, our YouTube channel to see prior events. I'd like to acknowledge the IIEP Executive Circle for their support and welcome any members in attendance. And I'd like to thank Maggie Chen for all her work organizing this year-long virtual conference. I'd like to flag to the audience to please put any questions you had in the Q&A function, and our moderator, Barbara Stallings, will bring those back to the speaker and the discussant later in our conversation. And now I'd like to turn it over to James Foster, my predecessor at IIEP and now Vice Dean of the Elliott School, to introduce our speaker.
Thank you, Jay. I'm honored to be here, giving a shout out to my old friend Edwin Lai of Hong Kong University of Science and Technology on the occasion of the release of his new book, One Currency, Two Markets, China's Attempt to Internationalize the Renminbi, from Cambridge University Press. You have received Professor Lai's bio with the event materials. I'd like to go beyond the bio with my comments. Edwin and I were colleagues some 30 years ago when GW Professor Irene Foster and I had just moved to Vanderbilt, and Edwin arrived as the hotshot student of Joe Stiglitz and crew at Stanford. I learned many things from Edwin, and as I recall, we almost co-authored a paper on product variety using the Dixit-Stiglitz production function, which interested me greatly as a measurement and functional form kind of person. But alas, I was drawn away by three kids who made their appearances during that time. Since then, I've followed Edwin's productive career from afar, and in recent years held out hope that he could join us for IIEP's China Conference. And what a great occasion, the release of his book, considering a key question of the day. Congratulations, Edwin. I look forward to your presentation.
Thank you, James, for a very nice introduction. I'm really very pleased to be here talking about my book. I think without further ado, let me just start. Okay, so by sharing my screen, so here, and let me see here. Okay. So this is my slide. I hope you can all see this. So the title of my talk is One Currency, Two Markets, China's Attempt to Internationalize the Renminbi. Okay, let's see. Oh, okay, hold on. Okay, so we know that the Chinese government is trying to internationalize the renminbi, but what are the real reasons for doing it? Well, many people would say that, well, one reason is China wants to seek independence from the US dollar and its associated payment system and the US dollar-based international monetary system for financial and national security. And this is one of the obvious reasons that many people would say. But there are also other reasons, which I'm going to discuss as well. One issue about renminbi internationalization is that currency internationalization actually requires the currency to be largely convertible in the capital account. But China does not want to fully integrate its financial system with the West anytime soon, from what I can gather. So therefore, China actually adopts the one currency, two markets approach, which is that a firewall will be set up between the onshore and the offshore markets, allowing full convertibility of RMB in the offshore market, but partial convertibility in the onshore market. But renminbi internationalization requires more than the offshore market. It requires actually capital account opening, financial market development, and other things. So here is the outline of my talk. I'll do some introduction, and then I'll talk about why China wants to internationalize the renminbi, China's strategy of internationalizing the renminbi, the importance of capital account liberalization, the importance of financial sector liberalization, the importance of the offshore renminbi market, and finally, the prospects of renminbi internationalization. So, first of all, by way of introduction, I'd like to show you this slide, this table, which is the importance of renminbi in the international monetary system along three dimensions. The first dimension is the foreign exchange market turnover share. The US dollar share out of 100 is 44.15, but the renminbi share is just 2.16. In terms of international payments share, the US dollar share is about 55. Renminbi's share is 1.64. Foreign exchange reserve share, 61% for US dollar, 2% for renminbi. So you can see that the great disparity between US dollar and renminbi, even though China is the second largest economy in the world. So that's China's, in other words, the renminbi's role in the international monetary system is disproportionately small compared with its GDP, whereas the US dollar's role in the international monetary system is actually disproportionately large compared with its GDP. So that's one feature. Okay, here, if you look closer into the payment share of the renminbi in terms of international interbank payment, you see that the US dollar, as of 2016, the share, as I said, was around 55%, but China renminbi share is 1.64. Now, if you look at the GDP share of China, of these countries, you know, the US share was 24.53, whereas the China's share is 14.74 as of 2016. So if you compare these two numbers, you basically, you know, it just reflects what I just said, that the US is the US dollar is disproportionately play a larger role than its GDP, whereas the renminbi disproportionately play a small, much smaller role than its GDP. So why is it so? We're going to talk about that later. And in fact, you know, the renminbi really has to increase its shares in all these dimensions in order to internationalize the renminbi. One more dimension is the denomination of outstanding stock of international debt securities. So again, here you see that the US dollar account for like 47% of the denomination of the international debt securities, whereas the renminbi only account for 0.41%. It was much, much smaller. Okay, so let's talk about the background. First of all, the current world, many people will describe as being characterized by something we call dollar standard. In the post-Bretton Woods international monetary system, the US dollar is still the main reserve currency, especially many developing countries would still peg their currency to the US dollar. So that's why we call this a dollar standard. Now, on the other hand, countries somehow get into this so-called dollar trap because of that, because they because the US dollar is such a dominant currency, and many countries want to peg to the US dollar, and therefore they would fall into this dollar trap, because they have to accumulate huge quantity of US dollar denominated reserves, so that they can somehow safeguard this peg with the US dollar, and to prevent speculative attack on their currency, for example. So if you look at China, you can see the reserve of China is very, very large. It's been growing ever since the Asian financial crisis back in 1998. China's foreign exchange reserve basically, ballooned, and it got to a maximum in around 2013 of close to $4 trillion US dollar. And then it gradually falls a little bit, but still maintain around $3 trillion US dollar worth of foreign exchange reserve. Out of this, many people believe that about 2/3 are denominated in US dollar. So approximately $2 trillion US dollar of foreign reserve in the Chinese central bank, denominated in US dollar. Another thing we want to talk about is the open economy trilemma, which is that we know that renminbi internationalization means that China has to greatly relax its capital controls. So in other words, in this triangle, China has to relax this part, the freedom of capital flows, and assuming that China will always want to have monetary policy autonomy. So if you have this and this, then you cannot have exchange rate stability. So in other words, China will have to maintain much more exchange rate volatility if it wants to internationalize the renminbi, because it will have to allow much more capital mobility, and also assuming that it has a monetary autonomy, it has to have exchange rate volatility. So that's one implication. In other words, the implication is that China historically want to maintain very stable exchange rate with the US dollar, but it has to give up that goal. Okay, it has to allow more exchange rate volatility, in particular with the US dollar. That's one thing that that the Chinese government has to live with and have to prepare to tolerate if it wants to internationalize the renminbi. So let me move on to the next chapter, which is chapter 3. Why does China want to internationalize the renminbi? So first of all, it's about monetary sovereignty. China obviously want to rely less on foreign currencies such as the US dollar and the associated payment system. For example, to avoid the legal reach and sanctions of foreign countries, such as the US through the SWIFT system. This is something related to national security and financial security. But I also want to point out one factor which many people may not have realized or may not even agree with, which is that I think that certain quarter of the Chinese government actually wants to use renminbi internationalization to force domestic financial sector reform and opening. And this is called daobi in Chinese. That means that you create a force to, in the opposite direction. So in other words, to use external commitment to force domestic reform. This is because the internationalization of renminbi will require capital account liberalization and financial market liberalization. And therefore, the commitment to internationalize the renminbi will require the financial sector to be more marketized, and also for the government to relax the capital control. And this is what some people in China want. So there is the third reason is that if you if China is able to borrow internationally, borrow and lend internationally in China's own currency, renminbi, they will provide more financial security. So this is related to a question called original sin, as pointed out by Barry Eichengreen, that developing countries cannot borrow internationally in their own currency, and which cause a lot of problem. But that's why China wants to do that, wants to be able to borrow internationally in its own currency. And another reason is China wants to escape from the dollar trap, so that it doesn't have to pack too closely to the US dollar and to accumulate huge amount of foreign reserves. So more autonomy in its current in its exchange rate. What are the benefits to the world for when China internationalizes renminbi? Is that in the long run, it can supply an alternative global safe asset for central bank reserves, an alternative global medium of exchange to fill the gap left by the shrinking importance of the US dollar and the euro, because relatively speaking, the US economy and the Eurozone economy is going to shrink compared with the rest of the world. And countries like China and maybe India and other developing countries, they will be relatively expanding in their size, in the economic size, and therefore the US Treasury security would not be enough to supply the world for the demand for safe assets. So you really need a third reserve currency, and the renminbi is this obvious candidate for safe assets. So the next question is about China's strategy of internationalize the renminbi. One very important move is renminbi trade settlement, which the pilot scheme started in mid-2009. So as a result of RMB trade settlement, a large pool of offshore RMB was formed because a lot of renminbi actually flew out of China as a result of RMB trade settlement, because at that time the renminbi was appreciating and people expected to appreciate. So people outside of China were happy to receive renminbi to pay for their imports. So a lot of renminbi flew out of China and forms a large pool of offshore RMB. And then this was followed soon after the formation of the offshore RMB foreign exchange market in Hong Kong in 2010. And that is a very important development. And then same thing as the Offshore Rmb Centers formed in Hong Kong, Singapore, Taipei, and London. And Hong Kong is the largest, by far the largest RMB center. Let's say, for example, in terms of payment or deposit, it accounts for like 70%, at least 70% of the total. So these offshore centers will be responsible for settlement and clearing of offshore RMB payments, for example, trade settlement. And there will be a lot of renminbi bank deposits in these offshore centers in Singapore and Hong Kong, London, Taipei, and there will be dim sum bonds and renminbi loans. So dim sum bonds are basically offshore renminbi bonds. Offshore renminbi bonds, basically. It could be issued by Chinese entity, but it also could be issued by non-Chinese entities. Okay. And also China engaged in number of capital account opening and financial market opening measures. For example, liberalization of capital flows. You have all sorts of acronyms here. You have QFII, which is a qualified foreign institutional investors, qualified domestic institutional investors, renminbi denominated qualified foreign institutional investors. All these are, these are, qualified institutional investors into China or out of China. And then you have this so-called stock connects, bond connects, and most recently, just happened this year, called cross-border wealth management connect. So all these things are sort of, schemes that allow, foreigners to invest in China under certain circumstances, and they can use foreign currency and then exchange in the renminbi and then invest in China, and then the proceeds can actually be expatriated back out of China, so under certain circumstances. So China still have a lot of capital control, and it's sort of allowing certain channels to allow the capital to flow in and out. So still controlled actually. And then there's bilateral currency swap agreements between central banks, between China's central bank and foreign central banks. So this is basically, in case there is a need to settle trade, for example, in their own currencies, that can be done. Okay, so this is actually one way to bypass the use of some other currencies, in particular the US dollar. Okay, it can bypass the use of US dollar for settlement of trade, for example. So here's the top 15 offshore renminbi economies in terms of payment. You can see that, as I said, that Hong Kong, as of June of 2018, that's already 3 years ago, but I think the picture hasn't changed qualitatively. Hong Kong is by far the largest renminbi center, and then followed by United Kingdom, a little bit surprising, United Kingdom, and then Singapore. Okay, so these are offshore renminbi centers, as I said. Now here, if you look at this, these are the deposits in Hong Kong, in the Hong Kong offshore renminbi center. So by the way, the offshore renminbi is called CNH, whereas the onshore renminbi is called CNY. So these are all CNH deposits. So you can see that the deposit reached a peak around 2015. Okay, and then it fell actually sharply. All the way to to a very low level, much lower level. So what happened? What happened is the following. What happens that there is a great setback in the summer of 2015. In the summer of 2015, the Chinese authority allowed the renminbi to depreciate actually quite sharply within a few days. And it actually shocked the market, and then people began to change their expectation about the renminbi. So people begin to be pessimistic about the renminbi. So so as a result, the renminbi deposit in Hong Kong actually fell sharply, and the offshore market actually lost steam a lot. It was a great setback. Here is the cross-border renminbi trade settlement, which is, you can see that also it became, less. It reached a peak around 2015, and also it actually falls ever since. So we can see that, this is a watershed here. The summer of 2015 was in fact a watershed. That is a great setback for RMB internationalization, and I can say that even today, 2021, the share, I mean, even that share has not reached the peak in 2015. So still, RMB internationalization is still a rather tough task for the Chinese government, actually. So if you look at the offshore renminbi deposits by region, you see that Hong Kong is the largest, and then followed by Taiwan, Singapore. This is Q2 of 2019, okay? And then if you look at the CNH bond, as I said, dim sum bonds, this is offshore renminbi. Again, it reached the peak at around 2014, 2015, and then it fell quite a lot. So nowadays, we're 2021 now, but I think the amount of dim sum bond that is being issued is not very large. I mean, people have lost interest in dim sum bonds, so this is another problem. So if you look at okay, so now let's talk about the importance of capital account liberalization. I have pointed out that renminbi internationalization actually requires a few things. First of all, it requires the GDP of the country of China to be large, very large, but it also requires capital account opening of China. It requires financial market development for China. And so in this chapter, I talk about the importance of capital account opening. So first of all, we know that China's capital account openness is actually very low, very low, even by developing country standard. There are many capital controls measures. Anybody who had traveled to China or try to do business with China will understand the capital controls are really quite serious in China. Secondly, foreign ownership of domestic bonds is very low. Okay, so in other words, foreigners don't really buy a lot of Chinese bond when you compare with other countries. It's very different. So first of all, let's look at the this is the gross international investment position as a percentage of GDP is a de facto measure of capital account openness. So you can see that this is China. The solid line is China. This is about 100%, but for US and Japan, they are 300%. In other words, the gross international investment position is 300% of the GDP for US and Japan, but for China, it's only 100%. So China is basically very similar to Indonesia in terms of capital account openness measured in this dimension. So it is lower than Korea, for example. It's lower than Thailand. Thailand is 200, China is 100. So you can see that even by developing country standard, China's capital account openness is still quite low. So why is capital account opening important for renminbi internationalization? Well, the reason is that if you have freer capital mobility, that will increase inward and outward investment flow, right? So then, if you have more investment flow in and flow out, then it will increase the extent to which the currency is used internationally, and increases the market thickness of the currency. Because like when foreigners invest in China, they will have to use renminbi. They have to exchange the currency into renminbi and then invest in China, and then they can take out their money. But if they want, they can actually if the Chinese allow, they can take the RMB out. They can take the RMB out of the country and then keep the renminbi offshore. They can keep offshore renminbi. So as the offshore renminbi accumulate, as more and more offshore renminbi accumulate, it actually becomes the renminbi become a more international currency as well. So the market thickness of the currency is very important. Okay, and market thickness will increase with the capital account opening of China. So one measurement of market thickness of the currency would be total amount of payment in renminbi, total amount of international payment in renminbi, or the foreign exchange turnover share of the renminbi. Okay, and right now it's still very small. So thicker market for a currency lowers the transaction cost of currency conversion and increases the convenience of using the currency. So the second factor that is important for renminbi internationalization would be the financial sector liberalization. So a deeper, broader, and more liquid financial market will increase foreign investment in renminbi denominated assets. So given that, if you maintain an open capital account, but opening the capital account is not enough. You still need to have deep financial development, because if you don't have enough financial development, then your financial market is not attractive. Your financial products are not attractive. So financial development increases the extent to which the currency is used internationally, because people are interested in investing. They're interested in keeping the renminbi. Okay, people are interested in keeping offshore renminbi because the offshore renminbi allows people to go and invest in China, in lots of financial products in China, and then to park their money there. So it's pretty much like in the US dollar, right? In the case of US dollar, why do people like to keep US dollar offshore? Well, because keeping US dollar, you can have all sorts of use for the dollar. You can use it for to settle trade. You can invest in the US, right? You can invest in the financial market in the US and get very good return, and then you can get your money out whenever you want, right? So basically, that's the idea of why you need to have capital account openness and financial development, and then the market of the currency will become faker as a result of that. So so here you can see that China's financial development again is actually quite low, compared with other more developed markets. So here's the IMF Financial Development Index. The highest is 1. So US and Japan are 0.9, whereas China is here, which is about 0.6 something. It is lower than South Korea. It's lower than Thailand. It is higher than India and Indonesia. So it's not that high even by developing country standard. So still a lot of room for development, for the financial market development. One thing I want to point out is about the structure of China's financial sector. The structure of the financial sector of China is actually lopsided. The banking sector is disproportionately large compared with the bond market and the stock market, and that is not enough. So it has to really, China really had to develop the bond market a lot more and the stock market a lot more. An underdeveloped financial market cannot be broad, deep, and liquid, and it also cannot be open, right? If it's underdeveloped, then opening underdeveloped financial market is actually risky, because the financial system can be easily destabilized by inflow of foreign capital. So see, the financial sector of China is actually characterized by financial repression. In particular, the banking sector. The banking sector, is the largest component of the financial market in China, but it's characterized by all sorts of financial repression measures, such as interest rates controls, dominance of the state-owned banks, control of credit allocation to favor the state-owned enterprises, many of which are unprofitable. So financial repression, it leads to capital misallocation. Small firms will be disadvantaged as a result of that, because a lot of credits are channeled to the state-owned enterprises, which are large. But then the small firms will be disadvantaged because the small firms, basically they're more riskier. They are riskier borrowers, whereas the state-owned enterprises are actually much less risky. So that's a problem, misallocation of capital. So you can see this financial repression measure here from this diagram here. So this top curve is the benchmark lending rate, and the dotted curve is the benchmark saving rate, savings deposit rate, savings deposit. So in other words, this deposit rate, this is lending rate. So the benchmark rate, historically, all the large state banks have to follow strictly these benchmark rates historically, but in recent years they have relaxed that. But if you just look at the benchmark rate, you can see that they intentionally set a a gap between the benchmark lending rate and the benchmark deposit rate, and they are never lower than, this gap is never lower than 3%. So in other words, the profits of the state-owned banks are always guaranteed, at more than at least 3% if these benchmarks are followed. So this is one one phenomenon of the financial repression. But the biggest problem with the financial system is the banking sector, as I said, as you can see here, and the existence of a large number of unprofitable SOE. The reason is that the banking sector has to serve this unprofitable SOE. The reason is that because this SOEs, these state-owned enterprises, they perform not just economic functions, but they also perform social and political functions. So that's why the government has every reason to protect at least some of the SOEs and to give them cheap credit. Okay, and the state-owned banks actually plays this role. I mean, they have to direct cheap credit to keep these state-owned enterprises afloat, and that for that reason, the banking sector reform becomes difficult because they are not the banks themselves. They cannot really compete with some other. If you open up to the banking sector to private entry, then this state-owned banks, they may not be able to compete because they have this burden of having to subsidize the state-owned enterprises. That's one of the biggest problem of the financial system reform. So here, in recent years, however, the Chinese government actually had tried to reform the system a little bit. They actually had tried to liberalize the lending rate. They have tried to make the lending rate more market determined. So in recent years, there is a initiative which is to marketize this so-called loan prime rate. Okay, so loan prime rate is now supposed to be more market oriented. So as a result, the loans will be more determined by the market, and then banks will have incentive to serve the small and medium enterprises by charging them perhaps higher interest rate, and then they can differentiate between different borrowers and so on and so forth. But the deposit rate is still not very marketized. The lending rate is a little bit more liberalized, but it's still not totally market determined. Okay, so that's the thing. So I have no time to go into detail of this. We can talk about this later. So here you can see that this is about the deposit rate. Okay, so the deposit rate, you can see that the deposit rate is still far from market determined. The actual deposit rate almost strictly follow the benchmark rate. So that is so people, in other words, the deposit rate is artificially set low, so that basically the Chinese depositors, they are screwed. They get very low interest rate from their deposits. So about the bond market, the development of the bond market, especially the central government bond market, is actually crucial in making the RMB a truly global currency. However, there are many obstacles, such as small size, lack of liquidity, and a small share of foreign ownership. So this is a big problem. This is so China has to really develop its central government bond market. Here you can see the total bond outstanding as a percent of GDP in 2017. That's 4 years ago, but I think the situation might have just changed a little bit, may not change a lot. So China's still very small compared with, let's say, Japan and US and the Eurozone. Foreign ownership of domestic central government bonds. Okay, so China is just 5% compared with US at 45%, UK close to 30, even Japan is 12. So so this China has a lot of work to do in order to make its currency internationalized, because the domestic central government bond market is important as a kind of safe asset for for fund managers and for central banks. The central government bond market is important. So if you look at the U.S., the U.S. Central government bond is the U.S. Treasury bond. Basically, it is the U.S. Treasury bond market is the largest asset market, is the largest bond market in the world. It's extremely liquid, and the foreign ownership is very, very large. If you look at the turnover ratio, you can see that for the Chinese government central government bond, the turnover ratio is extremely small, extremely low. In other words, not very liquid. So people don't buy and sell these bonds, and they just keep it, and there's very little. The secondary market is very small. So you really require a very large secondary market, a lot of turnover, in order for the central government bond to be an attractive, a liquid asset, a liquid and safe asset, for it to be attractive to foreigners. So the stock market, it's a big problem in China. The track record of the government intervention, there's a very poor track record of government intervention, lack of transparency, and then the problem of capital control. If you're capital control, people are not interested in buying your stocks, and then the problem of corporate governance and other issues. So the fundraising capacity of the stock market in China is still too low, way too low compared with the more developed and mature markets. So market capitalization of the 5 largest stock markets by country. So China's market capitalization of its stock market is much lower than that of the U.S., even though China's GDP is already, quite large, very close to that of the U.S. So you can see that is still needs to be further developed. Even if you add Hong Kong there, Hong Kong is a separate entity, so we shouldn't even mix Hong Kong with the mainland here. So yeah, so you can see that it's also an issue here. So this what I just said is that that the financial sector is lopsided. The banking sector is disproportionately large, but the bond market and stock market are not well developed, and they should be expanded. And the banking sector actually should shrink, relatively speaking. But the banking sector also suffers from its own problem of having to support the state-owned enterprises. So Chapter 7, I talk about the importance of the offshore renminbi market. Now here, the title of my book comes in, One Currency, Two Markets. So the offshore renminbi or the CNH is fully convertible, while the onshore renminbi, CNY, is not. And there's a firewall for capital controls between the two. So in other words, the offshore renminbi in Hong Kong, for example, cannot be easily flow onshore. And there's a control. There's a control for even the offshore renminbi to flow into onshore. So that's why you have one currency, but you have two markets. You have the CNH market and the CNY market. So internationalizing the currency while opening the onshore capital account at China's own pace. So this one currency, two markets approach allows China to internationalize the currency, while at the same time, it does not require China to open its onshore capital account immediately. So China can slowly open its onshore capital account. So that is the key. That's why China wants to adopt this one currency, two market. So for those of you who you may actually associate this one currency, two markets with one country, two systems. Okay, so it is actually a parallel. I'm going to say that one currency, two markets, and one country, two systems, they're actually parallel. Okay, similar principle. So so let me talk about but still, yeah, I just want to say that the main driver of renminbi internationalization are still the financial development and capital account openness in the onshore market. So the offshore market, even though it's useful, but the ultimate driver of renminbi internationalization is still financial development and capital account openness. Okay, so in other words, the offshore market alone cannot drive renminbi internationalization. So the onshore renminbi foreign exchange market is subject to more intervention, but the offshore renminbi foreign exchange market is subject to less intervention. It's more volatile. And also you can see here the offshore and the onshore market, they are connected. There is some sort of, as I said, there's a firewall, but at the same time, there's some controlled flow between the two. For example, you have the stock connects, Shanghai Hong Kong Stock Connect, Shenzhen Hong Kong Stock Connect. You have the One Connect, and recently you have the Cross-Border Welfare Management Connect. So there's allow people to buy assets with each other, in each other's. So, and then here, in the offshore market, in the offshore, there is this what we call the cross-border interbank payment system. The offshore foreign banks can send and receive renminbi payments directly to or from China through this system. So this system, the parallel of this system would be the chips in the US, for example. Okay, CIPS in China would be similar to chips in the US. So in the long run, the CIPS can potentially enable Chinese international payment flows to avoid the legal reach of foreign countries, for example, the US. So if the payments are, if China can transact internationally in renminbi more and more, and then people can send payments through the CIPS, then China doesn't have to rely on the US dollar or rely on the SWIFT for its messaging. Then there will be it will provide more security, financial and national security to China. So, okay, finally, I want to talk about the prospects of renminbi internationalization. As I said, there are 4 key factors for the success of renminbi internationalization. First, of the economic size, which China has, but China still need to work on capital mobility. It still need to work on the financial market. And finally, which I have not mentioned too much, is foreigners' confidence on the Chinese system. So China has the economic size on its side, but it needs to work on the other 3 factors. Okay, so but I would I have actually carried out some econometric analysis based on the gravity model. I got a proprietary data set from SWIFT concerning international interbank payment. Okay, so I'm actually running out of time. So, but I'm almost done. Okay, so so my model tells me that by 2030, renminbi can become a distant third payment currency if China increases its financial development and capital account openness fast enough. Okay, so but still, China, it's very hard for China to become a safe haven currency. So in the long run, the world may become a multi-reserve currency system with the US dollar, euro, and renminbi being the 3 main reserve currencies. However, the road for renminbi to get there may be quite long and uncertain. So, but if renminbi internationalization can successfully daobi domestic financial development and opening, then I would consider the initiative to have already been a success. So that's the end of my talk. Thank you very much.
Okay, well, it is now my honor to introduce our discussant, Dr. Masahiro Kawai, who is Emeritus Professor of Economics at the University of Tokyo, but who has also held some of the most important policy positions both in his country and internationally. For example, he served as Deputy Vice Minister of Finance for International Affairs in Japan as Dean of the Asian Development Bank Institute, and as Chief Economist for the World Bank's East Asia and Pacific region. When I was doing research in Japan a number of years ago, I ran into Kawai-san a number of times, and so I know personally the high esteem in which he is held in Japan and in Asia and internationally in general. Currently, among his other activities, Kawai-sensei is director of the Economic Research Institute for Northeast Asia. He teaches Asian finance at the University of Tokyo, and he serves as a counselor for the Bank of Japan. He has published many books and articles, but the one that I want to highlight is one that's particularly relevant for our discussion today. Together with Barry Eichengreen, he edited a book called Renminbi Internationalization, Achievements, Prospects, and Challenges, which was published by Brookings in 2015. So we are all eager to hear your comments. Professor Kawai, please go right ahead. You are unmuted, so you can go right ahead and I will mute myself.
Thank you, Barbara, for your very kind introduction. Professor Lai, thank you very much for your presentation of a very interesting book, which I very much have enjoyed reading. I have prepared PowerPoint, so let me share. Can you see my PowerPoint?
Yes, we can.
Okay,
Yes.
thank you. So I'm not going to repeat, what Professor Lai has said, but the book is a comprehensive coverage of Renminbi internationalization issue. Although he did not have much time to spend, the last point of this slide, he concludes that the world may become a multi-reserve currency system with the US dollar, euro, and renminbi as a result of his quantitative analysis. Now, Professor Lai explains motivations for China's push for renminbi internationalization. He emphasizes the importance of retaining monetary sovereignty from the United States and from the existing international monetary system. Now, Professor Lai takes a view that the financial market liberalization and capital account liberalization can proceed interactively in tandem rather than the former pushing the latter. I think this is a very interesting point. Throughout the book, most of the points I agree, and there are certain issues that I could not agree with, but here my disagreement is not so strong, but evidence seems to suggest that the degree of capital account openness is constrained by the degree of financial market development measured by depth, breadth, liquidity, not simply in terms of the quantity measure of financial market development. So to speak, the quality of financial market development does matter, and that constrains the degree of capital account openness. In other words, a country cannot go beyond what the financial market has achieved in terms of depth, breadth, and liquidity. And also in the case of China, the authorities are extremely reluctant to liberalize capital outflows by residents, even though the authorities are promoting capital inflows, particularly since the 2015-16 mini crisis. Professor Lai just explained that a little bit. There was a massive capital outflow from China, a very sharp decline in foreign exchange reserves and foreign exchange rates and stock markets. So that was a chaotic period. That is something I would describe a mini crisis period. After that, China adopted very severe capital outflow control. And at the same time, China has been promoting capital inflows. So, and also the authorities seem to understand that if capital outflows are liberalized, then huge amounts of capital could leave the country. So, capital account liberalization has been going on, but capital outflow liberalization is the most important kind of thing that we want to watch. And also, Professor Lai, Professor Lai identifies factors for the success of renminbi internationalization. Economic size is important, so China does satisfy economic size. Free capital mobility, China doesn't have. Development of a deep, broad, and liquid financial market. Now, Professor Lai says in his book that the financial sector cannot be reformed without reforming the state-owned enterprise sector, and also without developing an independent judiciary, an independent central bank, democracy, and freedom. Basically, Professor Lai says significant reform of SOEs is needed to promote financial sector development, and also having independent judiciary system, basically modern institutions and governance systems would be needed. So this suggests that a true internationalization of the renminbi may come, but but it may take decades to achieve it. And also, people's confidence on the renminbi is identified. And again here, Professor Lai says that it seems unlikely that a country without a contestable democracy and so forth, democratic institutions, the confidence of the world on the renminbi would not be secured. So he says it, and I agree. I tend to agree, but this would mean that truly international renminbi may not be achieved anytime soon. Okay. Now, there are several things that the book does not do. The book does not analyze several issues, like the function of the renminbi as an anchor currency. Anchor currency is a currency which other countries would use for their exchange rate management. Typically, the US dollar has been serving that role globally, and the euro for many European neighboring countries of the Eurozone. this aspect has not been quite analyzed. Impact of the digital renminbi is not quite discussed. And then he discusses yen internationalization, but the treatment of his yen internationalization is something that I cannot fully agree with. And also historically, Thailand had an experience of internationalizing the baht in the early 1990s. Eventually, by the way, that led to the Thai baht crisis of 1997. I thought Professor Lai might have wanted to take a look at that issue. And Professor Lai refers to open economy trilemma issue, but this issue could be treated in a more detailed way. And also, Professor Lai does not explore rigorously the role of political systems like a pluralistic democracy and institutions for renminbi internationalization. I want to come back to this issue just in a minute. I am an economist, but many people would be interested in the question of international political motivations for China to promote renminbi internationalization. Is China trying to challenge the existing international monetary system dominated by the US dollar and the United States? Or is it simply trying to achieve monetary sovereignty? Or is it trying to improve functions of the current system? Basically, the question is China interested in getting rid of the existing international monetary system and replace it by the renminbi dominant international monetary system? Professor Lai did not quite discuss this issue. So on the anchor currency issue, a paper by IMF economists identifies renminbi block in the world. And over time, the size of the renminbi block has increased according to this analysis, which uses, by the way, the method that my co-author and myself have developed. On the Japanese yen internationalization, that was success. Professor Lai says Japan did not internationalize its currency. He says that in several places. It's not correct. The yen has been internationalized, but it has not achieved the level comparable to the euro, if not the US dollar. There are several reasons. Professor Lai identifies also his own reasons. I think the most important reason is the 2 lost decades that Japan suffered in the 1990s and part of 2000s, following the bursting of asset price bubbles. And also Japan and also China too. Japan has been surrounded by countries which were developing countries. The situation was different from Germany. Germany was surrounded by advanced economies, and their international trade with the neighboring countries could take place in their own currencies rather than relying on the US dollar. But in the case of Japan, Japan was really alone, and many other countries were US dollar zone countries and Japan also was a US dollar zone economy. So this history played a very important role. By the way, so China faces some of these issues that Japan has faced. The most important lesson from Japan is not to repeat the bursting of the bubbles and lost decades. Having a crisis is maybe inevitable, but addressing the crisis and getting out of the crisis as soon as possible is the most important. So I provide some data comparing the Chinese yuan and Japanese yen. Still, relative to the Japanese yen, yuan's degree of internationalization is limited. In terms of trade invoicing done by ASEAN plus 3 countries, whether they use the Japanese yen or yuan, there is still a big difference between the yen and yuan. And when we take a look at currency invoicing for Japan and also Thailand, Japan's trade with the European Union is predominantly denominated in the yen or euro, not the US dollar. This is quite amazing. And in the case of Thailand on the import side, and in the case of Korea, in its trade with the European Union and Japan, the US dollar is not the most dominant currency. By the way, we don't have this kind of information from the People's Bank of China. I want to encourage the PBC to publish more data on currency invoicing on renminbi. And I mentioned briefly Thailand. In the case of Thailand, Thai export to the neighboring countries like Laos and Myanmar, the Thai baht is heavily used, which is very, very interesting. Mini crisis, because of time, I just pass this. Now, the trilemma issue, the slide I'm showing is taken from a joint paper with Hiro Ito, who has created the Chin-Ito index, and we are developing this trilemma issue. Now, China, maybe the next slide. In the case of China, in 2017 and before that, China is very close to exchange rate stability in the triangle. And still China is not out of de facto a stable exchange rate. Although over the past few years, it may have slightly changed. But China is not moving towards a fully flexible exchange rate, which is the top corner of the triangle, where Japan is located today. So still China is very much concerned about exchange rate volatility. Now, other factors, particularly democracy and institutional changes. I thought Professor Lai has done a very interesting empirical study to identify determinants of the renminbi international payments ratio. And he develops several scenarios, which I thought was interesting. One suggestion I want to make is that in scenario one for 2016, which is the base year for Professor Lai, China's GDP becomes that of the US, but its level of financial development and openness remains the same. I would suggest that he would do another scenario where China's GDP becomes the same as the US GDP, and also China's level of financial development and openness becomes the same as the United States. What would happen to this ratio? I thought that would be interesting, and also another issue is the institutional factors and governance factors like democracy, rule of law. I thought those factors could have been incorporated in the estimation, and Professor Lai could have examined the impact of those and see if a shift towards democracy and a much more improved governance system would improve the use of renminbi. So this is my final slide. It's a very interesting and very insightful book with some remaining issues. There are still some technical issues on renminbi internationalization, further exploration of the determinants of the degree of renminbi internationalization, renminbi as an anchor currency, digital renminbi, more careful treatment of Japan, role of political systems and institutions for renminbi internationalization, and also the impact of the China mini crisis on renminbi internationalization, whether this impact is going to be a prolonged impact, or is it going to go away in the relatively near future? This is something I want to ask Professor Lai. International political motivations of renminbi internationalization, and also what is the future of Hong Kong? Hong Kong is an international financial center, but recently its democracy is at risk. Does it have a implication for the financial market in Hong Kong? Okay, sorry for my long comments.
Okay, so we've got about 15 minutes for questions and comments. I'm going to use the moderator's privilege to ask a first one, and then there's some others on the Q&A screen that I will get to. I should also say that there are a number of interesting ideas introduced in Professor Kawai's comments that I would like to follow up on, but we don't have too much time here. Professor Lai, you tend to treat China in what international relation theorists would call an unitary actor. China does this, China does that. I wonder if you could do a couple of things. One is to discuss who are the most important actors in China in terms of the possible internationalization of the RMB. And more important, is there disagreement among these actors? Are there some actors that are pushing for internationalization and some that are against it? How does this play out?
Okay, it's a very good question. I'm quite sure that there are different factions. Some favor faster internationalization of the renminbi. Some favor slower I can identify by and large two types of people. One that thinks that it is one that think of RMB internationalization as part of the reform and opening policy of China. So it's just a continuation of reform and opening policy of China, and they favor continue pushing for RMB internationalization as part of the opening of China. So they would favor trying to open the capital account more, and also liberalize the financial sector. And of course, they also think that they have to be cautious about this. They're not advocating very, very fast pace, but cautiously opening up. But there is also another faction that basically think that renminbi internationalization is not to be, really should not be an independent goal or initiative to be pursued. Just let it happen. It will happen naturally, and it should not be an independent goal to be pursued. It just, the more important thing is just let financial development just go at its own pace. And when financial development becomes sufficiently mature, then the capital account can open more, and then the currency can internationalize more. But I guess I'm not answering your question, right? So you want me to answer, to tell you who are these people, or I mean,
yes, it would be interesting to know. You lay out these two positions. Are there different ministries? Or are there SOEs, the banks, the central bank?
Okay.
How does that line up?
Okay, by and large, according to my observation, the central bank is actually for opening. They are more for opening. They're more the people who are inclined to do more renminbi internationalization and to open up the country and all that. They are, for example, if you look at the current governor of the People's Bank of China, Yi Gang, he and his predecessor as well. I mean, Zhou Xiaochuan. They are, to me, they are the more liberal wing of this in this issue, and they are for opening. They want to open. They want China to continue to open, and therefore to international, the renminbi is part of that. So that is one side. If you want to say that's one side, and then who are the other side? I think would be some vested interest in the financial sector, the banking sector, for example.
Yeah,
I think they would be against renminbi internationalization because they have vested interest. They actually now they have protected profit. Their sectors are protected. If you want the international renminbi, then you have to liberalize the financial sector. And then they will lose their guaranteed profits, and the interest will be eroded. So I can think of the incumbents in the financial sector, especially the banking sector, will be the other
Let
side.
me stop you there because I am taking time away with my question from the ones on the Q&A. So let's move to that.
Okay.
The first question actually would give you an opportunity to talk about something that's in the book, but that you didn't have time to talk about in the presentation. So here's the question. It says, it looks like China does not have a strong stock market and does not depend on foreign investment. Rather, China lends and invests money to developing countries. China already has a stronghold in the economy of her neighbors. If RMB internationalization succeeds, how much influence would this have on China's relationships with the neighbors? So since you have this very interesting section on the Belt and Road Initiative in your book, that gives you a chance to talk a bit about that or whatever else you would say in response to this person's question.
So let me try to understand the question. The question asks, if the renminbi become more internationalized, how would this affect China's influence on foreign countries? Is that the
Yes,
question?
I believe that's the question. Yes, especially on the neighbors.
On the neighbors, for example,
Yes.
the Southeast Asian
Developing countries and particularly the neighbors.
Well, I think the influence would be larger. I mean, obviously, I mean, there's more political influence actually. Internationalization of renminbi of the currency will increase China's political influence, because then if foreign countries are using the renminbi for trade settlement or as a foreign exchange or as a foreign reserve in the central banks, then when they need renminbi, China can lend them renminbi, and that actually will give China a stronger political influence, for sure. I'm quite sure about that. So I don't know what else I need to say. If you want to talk about Belt and Road, I think to me actually Belt and Road doesn't really help renminbi internationalization very much, right? So that's right. So but if renminbi become more internationalized, then the Belt and Road projects and the Belt and Road countries may use more renminbi, and that actually will increase China's influence as well. I think political influence is a consequence of currency internationalization. I'm very sure about that. Yeah.
Very interesting point. I can back up that your first point with some interviews I did a number of years ago in Vietnam, especially in the northern part of the country when they felt being forced to use RMB in their transactions with China. And they were very upset about this and thought, as you said, that it increased China's influence in that particular country. So they would certainly agree with you.
Right, right.
Let me read another of the questions here on the Q&A. It says, your presentation seems roughly consistent with the view in Rush Doshi's recent book that China's attempt to internationalize the RMB is part of their strategy to replace the United States as the world's leading power. Should the United States actively counteract such internationalization or let contradictions with their other policy objectives, I believe that means China's other policy objectives, such as state control of the domestic financial system, cause it to fall on its own? So this person assumes that internationalization will fail, but should the United States help to push it toward failure if you believe that China's real goal is to displace the United States in terms of international hegemony?
Okay, it's a very interesting question, and I think China is not trying to replace RMB, replace US dollars. China is not trying to use renminbi to replace the US dollar. I don't think so. I think they just want more monetary sovereignty. I think that actually answers Professor Kawai's question as well, because he's asking what is the international political motivation of China in renminbi internationalization. I think the motivation is mainly about monetary sovereignty, mainly about China wants to secure its own sovereignty to minimize the legal reach and sanctions of foreign countries, and also, of course, have his own payment system. That's also financial and national security kind of stuff. But it's not trying to replace, not trying to use the renminbi to replace the US dollar. So that, but then the question also asks, what should the US do?
Right.
But if the motivation is not trying to replace the US dollar, then there's not much the US need to do, actually. It's just let China do it. Just let China do it. And China will not do it very quickly. I'm actually quite convinced that they will do it very slowly because of their own system. They would not open up the capital account very quickly. So this is a very, very slow process, and with actually a lot of uncertainty. And the US actually should not worry too much about RMB internationalization, because the degree of RMB internationalization would be quite low even in 20 years' time, I think. It's very slow. And the US dollar is still going to be a dominant currency for a long time to come.
So the US doesn't have too much to worry about in this particular aspect of China's international activities, perhaps in other aspects, but not in internationalization of the RMB.
That's right.
Okay. We have a couple of minutes, and I want to come back to one or perhaps two of Professor Kawai's questions. Things that you didn't emphasize too much, but that you seem to think are quite important. Why is democracy in China relevant for the internationalization of the RMB? I can certainly see why rule of law might be. You said that you had to cut off your talk in terms of how the international system would regard China. But why is democracy important? Why can't just a very efficient, authoritarian Chinese system that has a rule of law, and many people think that China has actually been progressing in terms of establishing some rule of law. Why isn't that okay? Why democracy and internationalization? There might be other reasons for democracy, but I'm not sure about internationalization of the RMB.
So this is a question for
Are you asking me or
No,
Professor Lai?
I'm just saying that was one of your questions, Professor Kawai, and I wanted him to come back to that. If you want to elaborate on your question, you could do that too.
Okay, all right, okay. Yeah, well, we need a functional, transparent judiciary system. I fully agree. An independent central bank, an independent more clearly defined legal system, rule of law. Without democracy, it's very difficult to achieve these. I think China may want to pursue maybe the former Singaporean kind of avenue, but it may be very difficult. The political system change is really needed to see that. We need a transparent system which would require a free press, the freedom of expression, criticizing the government for its policy mistakes, failures, for better policy management. So democracy is a fundamental. Yeah.
Let me see if Professor Lai has anything to add, or if that's more or less what he had in mind as well about why democracy is important.
Actually, I have a slightly different take. I think democracy is important mainly for there to be enough checks and balances to check the action of the incumbent government, to prevent the government from doing whatever it wants. to, let's say, expropriate properties, that kind of thing. And that is important because if you want the currency to be a safe haven currency, that is very, very important. You need to have enough checks and balance in the government to prevent the current government, current administration from doing whatever it wants to the extent of expropriation of property or that kind of thing, changing the rule of the games, to hurt the investors in particular.
Okay.
So, for example, I'm a foreign investor. I invest in China, in renminbi in China. So, do I have my mind, a peaceful mind, investing in billions of dollars in Chinese assets? If I know that there is not enough checks and balance in the government, so that the government could possibly change the rule of the game at its own will. So the U.S. is a case, and it's just the opposite. The U.S. is the reason why there's a lot of people are willing to invest huge amount of money in the U.S. market. It's because they have a very strong checks and balance. And we know that the government cannot easily just expropriate my property or change the rule of the game as its own will, because there are other people that will say no, you cannot do it, because they also have their own money invested there. The huge amount. Other American citizens also have a lot of money invested in a system, and they will provide a checks and balance. Yeah, that's right.
Okay, thank you very much. This is a really interesting conversation. I would say that this finally concludes that China is not likely to have an internationalization of the RMB anytime soon if it has to include democracy. So let me thank both Professor Lai and Professor Kawai for their contributions, and to people in the audience, especially ones who asked questions that helped our discussion along. So thank you all very much. And I believe if you visit the IIEP website, you will be able to find out about future events, both related to China and other topics. Thank you very much.